Welcome to Short View Trading. It's Monday, 24th of April. What matters today for markets? And in particular, if you're a trader of US equity futures with a 1 to 2 week time horizon, what should you be thinking about and focusing on? That's the purpose of this clip. Do like and subscribe. We'll send it to you by email as and when it comes out. In the near term, there are lots of signs of growing complacency in markets. If we look at volatility, for example, as measured by the VIX, you can see it's fallen to multi-month lows, and somewhat troublingly for the bulls, given the speed of that move lower, the VIX is now technically close to oversold levels, which is generating a sell signal for equities, which, as you can see from this chart, equities are trading in a really tight daily range. Last Friday, that range fell to its lowest level since late last year. So equity market moves remain modest, volatility's low, they're on low volumes. And as you can see from this chart, those moves have been accompanied by relatively low levels of downside put protection in portfolios. The scale here is inverted, but as you can see, the put to call ratio fell last Friday, particularly on the one-day reading. So complacency is high, markets are not well protected to the downside. But not only that, there is some evidence of tighter liquidity in financial markets. This is the Goldman Sachs Financial Conditions Index. The scale is inverted. It's showing that conditions have tightened somewhat in recent days, albeit modestly. Usually that's accompanied by equity market weakness, adding of course to those other signs of vulnerability in markets. And we see tighter liquidity, of course, showing up in a number of key asset prices. Real TIPS yields, for example, have been backing up in the last few days. So liquidity sensitive assets like gold have come under a little bit of pressure. So the key question is, are markets going to wobble over the course of the next few trading days, or are they going to stay in their range and continue consolidating these recent gains before the uptrend resumes? Well, we answer all of that in our daily publication. In it, we make a 1 to 2 week trading recommendation, long or short, on US equity futures. It's available on the website to subscribers. We also offer a free trial. If you're interested, click on the link below, enter your name, email address, and we'll send you our daily publication free for the next 3 weeks. So what gives us an edge as we make these calls on markets? Well, it's indicators like this one you see on your screen now. This is our risk appetite scoring system. It's reasonably timely in picking key turning points in markets. Recently, you can see it's been on sell and it's now working its way lower towards buy levels. Other short-term risk appetite models like this one are even closer to buy, having also recently been on sell. So near-term complacency in markets is somewhat elevated. There are also signs of tighter financial conditions in markets. All of that's a bit troubling, but at the same time, some of our short-term models, having been on sell, are now moving lower towards buy levels. So how do we square the circle? How does one trade this market? We'll have a look at our daily trading publication for detail on that. That was your morning market hit. Do follow us on YouTube, search under Short View Trading. Join us on Twitter, LinkedIn, and or Facebook. Thanks for listening.